when you've been managing money as long as I have, which is coming up 20 years, it's very hard not to establish a little red book of tips.
We just can't sit at our desks in our high ivory towers in the city and think that we are going to get it right. We need to go out and do the work, do the research and do the numbers.
You need to understand what the fundamental value of a business is.
You have to ask all the questions that go into a normal profit and loss statement, produce your own numbers, and thereby you find out what all the things are that are coming through and how the managing director is thinking.
You need to think of a board and management as being either an asset or a liability to the company.
If you think he's a good manager, then invest in his company. If you think he's a bad manager, then stay away.
If you invest in a good business with strong economics, then over time, you know, the substance of the business will prevail.
Most of the money can be made where others have lost money. In other words, in industries or stocks where there's been a great deal of stress, really presents opportunities for new investors.
It was Edwin Lefebvre in Reminiscences of a Stock Operator, a famous tome written in the 1920s, where he said very clearly that an investor should be a good sitter rather than a good thinker.
I think probably patience is the best thing. Don't be in any hurry to do anything.
Good investors are natural risk takers, and I'd like to think I'm a risk taker and an optimist. Unfortunately, the third skill I think that really pays in investing is an element of scepticism.
If your starting point is being sceptical, it's really incumbent on companies to change that view.
We spend a lot of time thinking about management remuneration structures. We really want managers that think and act like owners. So we look at how managers are incented, and we want to make sure that they act in the best interest of shareholders.
Shares don't just entitle you to a share of a future income stream, but they also entitle you as a shareholder to a vote, and that vote gives you rights to help shape the direction and the future of that company, and we believe that all shareholders should use those rights to their fullest extent.
One of the things we really focus on is businesses that have high return on funds employed.
So value comes in two areas. One is absolute value, one is relative value. So assessing a company's value based on these metrics will allow you to find mispricings more consistently.
It's so much easier to compound up your capital if you don't have to first recover losses.
Our view is we want to hold things for 3 to 5 years and go to sleep.
And remember, investors, every stock has a life cycle, whether it's General Electric, ARB Corporation or Specialty Fashion. Every stock goes through a life cycle.
It's really important that you're doing this 24 hours a day because there's always something that happens overseas that might come out and affect your investments here in Australia.
People tend to be positive, but when you hear something negative, to me that's a sign that it's probably time to sell the stock.
Good stock stories unfold over time. They don't happen in 6 months or 12 months.
And finally, humility. The stock market is a great place to really bring one back to reality and to understand that, you know, this is a long-term business where humility pays off in the long run.